Hello friends, a very warm welcome to my channel. In this video we are going to talk about IRCTC. So it's a public sector enterprise in a sector where there are huge tailwinds, that is the railway sector. So we have not made many videos on public sector undertakings in this channel, but this was the company which was voted the highest in a Telegram poll. So if you're new to the channel, please do subscribe and hit the bell icon to get the notifications of all the new videos. And if you're not a part of a Telegram channel yet, do join today by using the link in the description button so that you join the correct Telegram channel. Every day morning I share my view on the markets, which will help you manage your portfolios better. So this will be the flow of our presentation. We'll talk about the business model of IRCTC in brief. We'll look at the stock performance in the last few years. We'll understand the basic financial parameters. We'll discuss why the stock has risen from the bottom recently. We'll look at the outlook which the management is giving going forward. We'll talk about the valuations of the company's stock. We'll look at the risks of investing in this company, and then we'll form a view based on all these things. So IRCTC is a public sector enterprise which is owned by the Government of India but managed by the Ministry of Railways. It's a mini Ratna company in the PSU sector, and this is the only company which is authorized, so you can call it a kind of a monopoly as of now, to do the ticketing for the railways, to do the catering for the railways, as well as to manufacture and supply mineral water, packaged water. So the company runs a website which is irctc.co.in, and maximum tickets of railways are booked under this website, and this is one of the highest used websites in the Asia Pacific region. This is the broad division of the revenue which comes from different segments. From internet ticketing, this company earns about 54%, from catering about 27%, travel and tourism around 10%, and the drinking water contributes roughly about 9-10%. So the majority of the revenue comes from internet ticketing. And this itself is the highest margin business for the company, and as the share of internet ticketing grows, the margins of the company can further expand. So this is the way the stock has behaved in the last 5-7 years. So during COVID, the railways stopped for a while, and that's why the company's financials took a hit. But post COVID, it has given a very strong rally, and it has risen up to almost 1250. So these are the prices post the split. And thereafter, as the valuations were very high and the government indicated a change in their policy towards the IRCTC, there was a sharp correction and the stock went into a long consolidation. And recently, it has come out of the consolidation range and it is moving towards its all-time highs again. So right now, it is trading at somewhere around 900, which is still far below its all-time high of around 1250. So technically also, the stock has given a breakout, and that's why the stock is getting discussed quite frequently everywhere. In terms of revenue, just in the COVID year, there was a dip of about 777 crores from the pre-COVID revenue of about 2,200 crores, but thereafter there's a sharp consistent increase to about 3,880 crores in the trailing 12 months. In terms of EBITDA, you will see a similar trend. It went down to about 188 crores in COVID, but later it was a sharp increase to about 1360 crores in the trailing 12 months. When you look at the margins, pre-COVID margins were somewhere around 31%, and which rose to about 47% in FY22, but thereafter they got normalized at somewhere around 35% now. So why this stock has given another jump in spite of a sharp correction post-COVID is this company is the only authorized entity to do the catering, ticketing and supply of packaged drinking water in the railway sector. So it is a kind of a monopoly. The growth in revenue has been consistent except the COVID year of FY21. So this shows that the company is growing strong. In terms of margins, the company has bounced back with very good margins of somewhere around 35-36%, which are very good in terms of any business you compare it with. And railway sector, as you know, the government is very keen in growing this sector by leaps and bounds, and they have been regularly announcing increase in the number of trains, which will gradually contribute a lot to the business of this company, as this company will again be an exclusive ticketing supplier and catering supplier to the new trains as well. Now, what is the growth outlook of this management going forward? Recently, they signed an MOU with BSF for corporate travel. So they are now catering to institutions beyond the railways also. They have set up their 15th packaged water manufacturing unit in Himachal Pradesh. And in the e-catering space, earlier they were having their own kitchens. Now they are also tying up with the other suppliers like KFC and all. And through the IRCTC e-catering app, people can book food from all these chains, and IRCTC will earn a commission of about 15% on them. So the customers get variety of foods to eat, and IRCTC earns commission on those transactions. The e-ticketing trend is rising, so as the e-ticketing increases, the expenditure for booking a ticket online from IRCTC's side is very less, so the margins will expand. There are new trains being added by the government, and as the number of trains increase, the business of this company will grow. People earlier they were eating here and there on the platforms and all, but now they prefer hygienic food, and this trend will contribute to the increase in sales to their catering division. And post-COVID, the amount of travel people do for their leisure is drastically increased, which will increase the ticketing as well as the tourism business also of this company, where they offer different tourist packages. Recently, the company also tied up with Zomato to boost their e-catering business, and as the number of Vande Bharat trains get added, the business of this company will also grow. When you talk about the valuations of this stock, earlier during the sharp rise in FY22, the stock price went up to 1250 and the valuations got stretched to more than 250 times the earnings, which was not practically possible to continue for a very long time. And thereafter, there was a sharp decrease in the share price, and now the valuations have normalized at somewhere between 15 to 70 times the earnings. So this has been a long-term average of this stock. Now you may consider these earnings itself as expenses, which you are right in your way, because this company has a kind of a monopoly in this business. It generally trades at higher multiples. So these kind of stocks you can't get at the lower multiples of about 20-25 P. But if you closely watch at these levels of around 60 times multiples which the stock trades, the upside is also very limited, as the growth is also more or less priced into the valuations. Now, what are the risks of investing in this business? This monopoly which the company enjoys, in case the government tries to allow the private sector to do any of these services which this company does, that is the biggest risk this company might face. And in case COVID, another wave or any other such pandemic occurs, that could be a very big risk to this company. In terms of execution, as the company scales, they have to execute in the perfect way, the way they have been executing till now, and they also have to maintain the quality of the service and the product which they deliver. That is an execution risk. In terms of valuation, the stock trades at premium valuation, so any slowdown in the growth or reduction in the margins may impact the stock price to a large extent. The government often talks about reducing their stake in the public sector undertakings. This remains as a overhang on the public sector companies, and in case the government tries to change any regulation related to the railways or the ticketing business, like 1 year before the government tried to announce something like that, there can be a sharp impact on the business of this company. So now, after understanding the business of the company, the risks involved, the growth plans, the outlook of the management, the valuations, what is a view on the company? If somebody is already holding the stock for a very long time, then they can continue to hold, as the sector has tailwinds and the business is steadily growing and the margins are being maintained. But if somebody wants to enter at these levels at fresh, they can expect only a limited steady upside in the stock, as the valuations are already priced in the growth in the near term. So more or less the pace at which the company grows its revenue and profits from here onwards, you can expect similar returns in the stock price also. Please do note that this is not a buy or sell recommendation. We are only discussing as a case study for educational purposes. So this was it about IRCTC. I hope you liked the crisp analysis. If you like it, hit the like button and subscribe to the channel. If you want me to make videos on your favorite stocks, don't forget to mention the name of the stock in the comment section. Do join a Telegram channel using the link in the description. If you are a part of any fake Telegram channel talking about some trading ideas, do come out of it right now and switch to the correct channel. Thank you for watching and have a wonderful day.